Welcome to Stock Talk on July 24th. Now today it is going to be a content-packed day. As a matter of fact, I'm going to try to get through, and I will get through everyone's tickers, especially the tickers that I've kind of missed in the past. I have it all situated right here, ready to go. So let's waste no time and get straight to it. We're going to be starting actually on the 1 day, 1 minute chart of SPY SPY, which tracks the S&P 500. The reason why we're starting on this graph today is because today we really saw a divergence of two markets. We saw the tech stocks actually selling off once the market opened. We saw as tech stocks NASDAQ falling, whereas the Dow Jones was kind of leveraging or providing the necessary buoyancy for the markets to continue on the upside. So when the Dow kind of started selling off, we did see a rapid decline, but then we saw a rapid recovery near the last few hours of trading. So I just want you guys to keep in mind, and I'm going to take you guys to the 1 year, 1 day chart on SPY because we formed a candle that is pretty interesting. Can you guys see this candle? Now, this candle, we gapped up from the previous day. Can you see this gap that was made around 280.50? Now, because of this current trajectory, because we actually sold off during the trading day today, remember when we've talked about, since if we break over the 281 resistance, we expect a rather effortless ride to the 284 mark. Now, because we sold off during the market day today, that is going to change just a little bit. That prognosis is going to change because I don't expect a free ride up. I do expect a little more fluctuation and a little more bumpiness as we get to that level. And that's just because there's a potential for us to fill this gap and maintain this support at 280.50. That could be where we come down to before we move another leg up. I just want you guys to pay attention that this portion has changed, but what has not changed? The bullish nature of the market certainly has not changed. Even though we sold off during the market day today, we still managed a positive. The S&P 500 went up 1.41 points or 0.5%. Pretty good, as we were over the resistance today. So overall, markets continue to be bullish. Now, before I continue with volatility and the commodities, I want to give you guys two very interesting things that I'm going to try to implement for you guys. So the first thing is I'm going to try to reply to all of your comments, especially the comments that you make in regards to market movement or tickers or support resistance levels. I'll try to reply to those on the YouTube comment section. So you guys might have saw that a little bit of that yesterday. I'll try to continue to do that as we move forward. The second thing is I will try to post an update on market conditions on the Facebook page. You guys can find my Facebook page on the description box down below, but that will be during the pre-market hours, so be on the lookout for that. In the meantime, if you guys could hit that thumbs up button if you do find this content helpful, it benefits me a lot as well, just kind of seeing you guys benefit from the trends that I discussed, especially if you're able to benefit from taking a position that was kind of talked about in this stock talk. Please give me a thumbs up, and I really highly appreciate everyone for watching these videos. So let's get back to TVIX or volatility. Now I want to show you guys volatility on the 180-day chart, because we've always talked about volatility on the 180-day chart because we've been below the blue line or the 20 EMA line. Now I want you guys to show you that we managed to climb over, but look where we closed today. We closed today at around $36 below the 20 EMA line, showing what? Yet another rejection of the 20 EMA, and therefore we do expect lower prices to come. Sure, there might be some small spikes in the middle, but overall the market sentiment continues to be good. Let's take a look at /CL tracking crude oil futures. Now here's crude oil on the 1 day, 1 minute chart. It was really one that was on an uptrend overall, but it was very uncertain. You guys can see this unsteadiness. We've had a sell-off, and this was around 9:18 in the morning today. And you guys can see this sell-off. We managed to close right at the support. at around 67.62. But note that we managed to climb above, and then we actually formed another cup formation, you know, possibly another leg higher. Now, I want you guys to take a look at the 180-day chart, because what can you guys see? Well, you guys can see that we're consolidating upwards, and surely that could be a good sign, but that could be another bear flag formation for another leg down. And the reason why I'm saying this is, even though crude oil went up just a tad bit, there could be, can you guys see that this could be a bear flag formation for another possible leg to the downside, where we've met the 150 SMA in the past acting as support, and where it could act as a support this time around should crude oil go down. Now, the SMA line is at $66. It is around $2.76 lower. Now, that's the bearish trajectory. Now, what is the bullish trajectory? Now, overall, crude oil, is the bullish crude oil notion intact? Ask yourself this question. Well, if you guys take a look at the 3-year chart, you guys can see that we're at the 20 EMA line. You guys can see that we've bounced in the past at the 20 EMA. We've bounced in the past at the 20 EMA, and now we've hit the 20 EMA line. So if one wanted to go into crude oil, where would you take that position ideally? Well, ideally, you would take that position at around 67.52, because you would give yourself leeway just in case you're wrong, and you guys will know when you are wrong at that point. But if you're right, there's certainly potential for crude oil to push higher. Note that this resistance line at 76.40, that resistance line is still there. Why haven't I taken that off the table? Because crude oil is still bullish on the weekly 3-year chart. And I want to just take you guys to the 20-year monthly chart. Here we go, crude oil 20-year monthly. Do you guys see why this would have been an active area of resistance? Now, we haven't head towards that area yet. Sure, we did form some sort of rejection near the top, but we haven't hit the top, so there's certainly potential for crude oil to push a tad bit higher. But right now, it's just in a more uncertain period, and therefore not one I'm willing to participate right now. All right, /NG tracking natural gas. So natural gas, I was looking for a definitive uptrend. We know that the support was around 2.712. Okay, we confirmed it once this was support, but I said this wasn't really that strong in terms of a confirmation. And the reason is that this was bolstered partly by the natural gas reports. Then we managed to gap down. You guys can see we sold on the news very sharply. We got a double bottom this time. Now, it looks more promising. I agree. That's number one. Number two, if you wanted to take that position, if you did take that position when natural gas was going higher, that's certainly possible. And that's certainly one that you could have traded because this was a double bottom. But number three, I'm looking for an entry into natural gas if and only if we climb over the 20 EMA and reconfirm that 20 EMA as a possible support. Right now, we're in the process of climbing over. That's step one. Step two, it needs to confirm that. So far, it hasn't gone towards the full length of those two steps, and therefore, I'm not actively participating in natural gas, but certainly something I'm watching as UGAZ did push higher, right? Natural gas following UGAZ. You guys can see that it went up 3.25% today. /GC gold futures. Now, gold futures was one that was really another one that was kind of interesting, because you guys know that, gold has been on a period of active decline, but managed to find support at the 1210 area down here. So I'm going to zoom in on the current chart, 1210. Okay, that is a pretty good sign. Unfortunately, the only thing about gold is you guys can see that gold managed to hit form this reversal candle down here. However, we made another semi-tail candle today, which is good. Obviously, it's a little more pro for gold. I do like that, but in my opinion, there's still a couple of days to go for gold to confirm that as a support. I want to see a little more confirmation. Today, it was an all right day. It was basically even. Gold didn't do that much. You guys can see we did form a tail candle to the upside. We formed a reversal candle down here. So gold is in the middle where if you wanted and really wanted to take a position in gold, you certainly could. But once again, I need to challenge you guys to find that position where you would be wrong. Because if you're wrong on gold, you should be out, and you should be out when, especially when we start dipping below and closing, especially on a 4-hour basis below the 1210.70 level. That would show a very bearish signal for gold. All right, so if you guys are in gold, JNUG is the one to be looking at. So you guys can see JNUG also showing a double bottom formation. We closed right at the 20 EMA, right down here. So I would give it a little more days, but surely if you did get in near the bottom or the support, because that's where you identified the support would be, that's a pretty positive sign, I think. So good job, guys. All right, let's take a look at the two tickers that everyone's curious about, or a lot of you guys are curious about. The first one is IQ. And remember, I talked about IQ yesterday and I gave you guys a speculation. What was that? So it was a speculation that it would break the 200 period moving average, or the red line, and that they would go below $30. Now, the question is, did it break the 200 period moving average? It did today, okay? It did break it. Did we go under $30? We have not yet. But what do we see? We have to look at this objectively. I know it's easy to get clouded, especially as investors, to get clouded in previous patterns because you've been eyeing IQ for so long. You might be clouded by what the patterns in the past. Now remember, the patterns in the past does not necessarily have to reflect the pattern right now, even though we look at trend lines. And the thing about this is, you guys can see how we consolidated sideways. Here's the 20 EMA line. Once again, rejection of the 20 EMA, and now we're heading back down. And that's why I kind of speculated, because we were kind of floating around the 200 SMA, and surely, in my opinion, that wasn't a sign that it was going to recover. Now you guys can see that that trend line has been taken off the table. It is gone because we've broken it, and therefore we should not revisit that trend line. And one thing I'm looking at is a support at 29.45. Now, ask yourself, is this a strong support? And the answer should be no. This is not a strong support at all. And because we do not have a definitive sign of reversal, this was by no means a definitive sign of reversal. This happened to be just, we hit the 200 period moving average, we found some buyers, and then we went back up. Now we're looking at a small support at 29.71, but in my opinion, not too strong. So I think there's still a potential for it to come down. Given market volatility is going to occur before earnings and during earnings as well, this is one certainly that is going to be fluctuating quite a bit, as this one we know moves 2 to 8 to 10% up or down in one single day. So this is just the one to keep an eye on. Note that earnings does come out next Tuesday, and you can imagine if earnings, right? I told you guys that the markets love to trick you into making the what? The wrong decision. They want to trick as many investors as possible to make the wrong decision. The market is not a gold mine. As a matter of fact, it's like a pitcher plant. It's going to eat, and crumble whatever, you have. And that's, that's one reason and that's one way, in my opinion, of psychology, market psychology, of why we broke this area and how we broke it. And that's one thing that will definitely be covered in the course of how I identify this and how, we know that it was going to go down. So, this is again speculation. I do expect, in my opinion, a dip below $30, possibly even earnings even lower than that, and then before a recovery back to the upside. Or, we'll reevaluate that when it comes, but that's just what I'm thinking right now. All right, so next one is Micron Technology, our stock pick for this month. Note that this month, number one, hasn't fully ended, and number two, Micron Technology has been floating around the support. And even though we're revisiting this quite a bit, right, I need you guys to pay attention, because when I talk about those stock picks, right, those are not for day trading, right? Those are for long-term holds. And therefore, you know, when something goes up or down, I'm not telling you that you can't go out of a position. I'm not telling you that you should go into a position. I'm just saying that, you know, these are the positions that I see, these are the entry positions that I see, and those are potential opportunities that we could make, you know, that 10% or so. Okay, by no means that it's going to occur every single time. So here we saw that Micron Technology got rejected at the 200 period moving average on the 180-day chart. You guys can see that it's been active. You know, you guys can see this actually 150 SMA has been acting as a resistance here. Now the 200 is acting as it here, and now there's a possible move back to the downside. Look at the more near term. Once again, rejection of the 20 EMA. Now, remember yesterday, or you know, a couple days ago, I told you guys what was the possibility. We saw this tail candle yesterday, right? And what did we say? We said that there's a potential for MU to fill this gap area, and that gap area could very well act as resistance, but we filled the gap today before we got rejected and came back down. So in my opinion, I think Micron Technology certainly has the potential to fall to around $52.30 or near there, which is this near-term support, and before possibly recovering back to the upside. So this is one that is in my radar. Of course, as we get down here, what are we doing, or what am I doing? I'm accumulating, you know, adding in more into MU just a little bit. But as we move higher, what do? We exit just a little bit. But my exit point, in my opinion, is still around $65 as we move forward. So I think this looks overall not too bad. Short term, down, perfectly fine with me, right? All right. So, and remember, this is just what I'm seeing. Like I said, you know, if you guys feel differently, you do not have to, you know, stay in. If you're in Micron Technology, you do not have to. And this is just my opinion. You should never base off your trades off of other people's opinion. It's only based off of what you are comfortable with trading. All right, let's take a look at Joe. We're going to tackle your ticker first. So thoughts on GE. So we're looking at GE and we're looking at the 180-day chart, and you guys can see that earnings came out. We do have a pretty solid support around here. However, GE is one that you guys can see has been consistently getting edged in by a lower high. And you can ask yourself, you know, what is the potential for profit in a stock that's been etched in by a lower high? And that answer should be not that much. Can you guys see this trend line right here? Now, you guys can see that as we're moving forward, this potential is getting lesser and lesser. Yes, there's a potential for us to go just a slightly bit higher, 2%. But at some point, and I don't want to take a chance on when. At some point, we expect a dip to the downside or a dip to the up, or a move to the upside. But overall, this is not one that I would be participating, as your margin of profit is getting slimmer and slimmer. Ben, hey, what's so special about 20 EMA and 50 SMA? So, we're looking at moving averages, and this is more covered in the course, and this will be covered in great detail, the moving averages. But the one thing I really liked about moving averages is it shows you where the markets could get rejected or where the markets could find support if it's on an uptrend. And that's what what you see every time when I talk about an uptrend. Just take a look at GE. What's happening? You guys can see that we bounce on the 20 EMA when we're on an uptrend, but we're on a downtrend. Look how we get rejected to the 20 EMA. And this is just one way to determine, one of the many ways, and that you should determine how the trend or how the stock would be faring in the next few days, weeks, or even hours. Is just looking at the trend lines, and that's what I like to look at. And of course, there's more detail that's covered in the course, so be on the lookout for that in the next few weeks. Milland, how do you set your TOS up? So your videos are awesome, so thank you so much for your comment. And yeah, that is also covered in the course. I gave you guys a sneak preview, and that will be covered. How do I set my TOS up? That's going to take a lot of time in this video. I'm going to spend this quality time, valuable time, talking about tickers with you guys. But thank you very much for your comment, and I will let you guys know in this video and on the Facebook page when the course will be released. So you guys will be the first people to know. All right. Thank you for the USLV comment. I know that I didn't talk about USLV yesterday. So USLV, you guys know, is silver. And one thing about silver is we did see a pretty nice 1 year chart. You guys can see this tail candle, a pretty nice tail candle. And right now we actually fared just a slightly higher, and we're kind of moving to the upside. However, I just didn't really like this. You guys can see that I came out of silver yesterday and it went higher today. But even though it went higher today, we sold off intraday. This kind of looks like SPY and kind of looks like this, where we went up, sold off, and then there's a possible move to the downside again. So while I like this candle, I need this to kind of give me more of a confirmation, especially on a yearly chart. This chart just doesn't look... this is not an active confirmation for me just yet, and therefore I'm holding off on silver. If you're in a position, I think it is okay, again, as long as you know where to set your stop loss. Okay. Thank you for your comment. Christian, can I take a look at CPE? I think you messaged me on Facebook. I think so. So here's CPE. You guys can see a support in this one. Wow, why didn't we look at the support right here at $9.89? Look how we bounced off the support once again, and now there's an 8% rise. So one thing to keep in mind is we have earnings once again coming up on August 7th, and I want to challenge you guys. What happened on earnings? Can you guys see these green candles all of a sudden followed by a red candle back to the support? What happened here? Here we pretty much sold off after earnings just a tad bit. Here we certainly sold off as we were overextended. You guys can see that we went up, retested the resistance, and sold off. So now we're near the middle of the trajectory. So there's a good chance, based off of just previous earnings, that we might start selling off again. You guys can see that we've pretty much sold off at least a little bit after earnings. I'm not that saying you should take a short, but I'm just saying that there's a possibility of coming down after the earnings. So I would wait for earnings to occur and then look where the trajectory is. If we're at a good position, for example, if we're under this box, you can imagine this box area, anywhere under this box could be a good buy area. So at that point, we could look into taking a position. Good call out. I do like this. Let's wait just a week or so. Draxon, can I look at LULU? Yes. So LULU. Whoa, what did I just type, guys? So LULU, we're looking at the 1 year daily chart, and this is a stock and company that has been outperforming. This is Lululemon, and this is one that kind of breaks out quite nicely. Unfortunately, we know that what comes up must go down as well, and therefore right now we finally started the downtrend. One can almost speculate, even though I wouldn't bet on it, but one can almost speculate that we could potentially short sell this one. Where would be our near-term support? Ask yourself, where's our near-term support? Well, our near-term support has to be a gap fill in this area, and this is the area between 108 to 113. It doesn't have to take 1 day or 3 days to come down. It can take a period of a week or longer for it to come down. But regardless, right now we are on an active down streak. I like the trajectory of this one, but because it's so overbought, it is finally time for it to try to come down, rest a bit before moving back up again. So yeah, this is a very interesting one. Actually, this is one that I'll keep in mind as well. Eric, Google. So Google was one that was helping the markets keep buoyant, especially the NASDAQ. Until Google started selling off in the midday. You guys can see that NASDAQ kind of fell as well. You guys can see Google. But Google got a huge boost yesterday after earnings. So Google, you guys can imagine, let's take a look at the... okay, so the only thing about Google is, while I like the trajectory, we did... Can you see this gap area once again that could be filled at some point? Now, so the thing is, there's a possibility of it coming down and revisiting this area. Especially if we correlate with this NASDAQ, especially if NASDAQ starts kind of dipping just a little bit, then we can expect Google kind of to dip along with it. Let's take a look at the 3-year chart. Yep, so the 3-year chart still looks pretty good. The uptrend is certainly intact, so you guys can see that we're getting differing information. Note that in earnings, we got pushed up, and we did move higher on the weekly, so there's still potential for it to move higher, certainly. So let's take a look at the 1-year chart, but the 1-year chart certainly looks a little lopsided because of the sell-off that occurred today intraday. So I think if you're holding this long, I think you're good. If you're holding this short term, it just depends on if a couple of percentage points matters to you. If that matters to you, then, you know, you can, but, you know, I think Google's a very strong stock, and
check your modem or router connection and try again.
Okay. All right. Well, that was interesting, but, yeah, so you can imagine it depends on if you're a short-term or long-term trader. Thank you for your comment. JD K9. So K9, you guys can see that this has been an active support in the past, and this is JD.com, and the support was at 35.41. Now let me just take a look at this pattern intraday really quick. Hold on, give me one sec, guys. Ooh, okay. So there's a slight problem with this chart, and the problem is now I see it. Okay, so JD has always been pretty strong, and it's in a pretty big volatile bull flag formation that's in the making. You guys see this bull flag formation? It's in a pretty volatile formation, so I expect possibly for it to continue dipping to around $34. We're near that area. That's the area where we want to see some tail candles. Can you guys see these tail candles in the weekly chart? How long in the week did we consolidate? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks before we managed to push higher. How many weeks did we consolidate here? 1, 2, 3, 4, 5, 6. How many weeks have we consolidated here? 0. So how many weeks do you need to wait? At the very least, I think 4 to 6 weeks before kind of waiting, you know, but this is on a period of active decline. I think we're a little too early into the game if we went into a position right now, and therefore hold off. Patience. All right, Rizwan. Hope you guys are enjoying. Are you guys having fun? Are you guys having fun doing all these tickers with me? Because I'm having some fun right now. So hopefully you guys are, as much as you enjoy trading, I you know, this is one thing that I see from traders, and traders love trading, and you know, especially if you can make money, that's obviously a very good motivation to do so. But what I'm trying to do is provide the quality trading, as well as trading obviously could be you know, more fun as well, because it's dynamic and the markets move back and forth. So but we definitely want to get the right trends. Here we're looking at Caterpillar. Caterpillar. Okay, so Caterpillar is showing a bull flag trajectory, and you guys can see that this is a very well-defined pattern, even better than the one before, JD. The one thing about this pattern is we're getting etched in below the 20 EMA line, and we're having a hard time kind of getting above it. Note this is another strange candle where we gapped up, but we sold off during the market hours. And when that usually occurs, that usually is a sign that, not always, but usually a sign that we could continue kind of going a little bit downwards. So there's a potential for it to make a couple more tail candles. If we get some more tail candles on a daily basis, I'll be a little more comfortable getting to Caterpillar. It has the potential to go higher, but is this the optimal buying area? Probably not. Is this an okay for an entry position Caterpillar? Probably. So this is one where you gotta manage your risk as well. And with that, I'm going to tackle, is there anyone, now let me, hold on guys, don't leave the video yet. You guys are still here, right? Okay, because I knew I was gonna miss some tickers. NVDA. Okay, so here's NVDA. Okay, so NVIDIA, here we are on the 3-year chart. We've had an uptrend. Now, the only thing about this is this is actually a pretty nice pattern. Know how we're consolidating. We've consolidated for 3 weeks. Good one. Good one. I like it. I like it. This looks very nice because it looks like these candles over here. Can you guys see that? Kind of came down. We formed a nice reversal change right here. We formed 3 weeks of consolidation so far. NVIDIA's on my watch list. That is a good one. Thank you for that. Who called that one out? XJX. Thank you for that. I like this one. Well done. Well done. Got nothing, not much to say to that. So, all right, guys. You guys know the updates, right? We have the Facebook comments that I'm going to try to post in the mornings. I'm going to try to respond to your YouTube comments either during the day. It might not be the same day, but sometime during the day. And I hope you guys enjoy your day. Hope you guys enjoyed a long video. You know, if you guys are just chilling out, you know, watching these videos, hopefully it was informative. Hit that like button. Subscribe to this channel if you haven't done so already. I love all the subscriptions. We have so many, hundreds upon hundreds of subscriptions so far, and this channel hasn't even been like a half year old. So it's only been like 3, not even 4 months. So thank you for all of your support as always. Let's continue the great momentum, and I'll see you guys tomorrow, Wednesday, for yet another Stock Talk.